Bitcoin has done the unthinkable, crashing below 85,000. After months of explosive growth, billions wiped out in hours, social media in chaos, analysts split. Is this the beginning of a catastrophic unraveling or the last dip before Bitcoin's biggest rally ever? Tonight we go deep, beyond the tweets, beyond the fear, beyond the noise, to answer the question every investor is asking. Welcome back to the channel. If you woke up today and felt that punch in the stomach as you opened your charts, trust me, you're not alone. Markets around the world are reacting to Bitcoin's sudden collapse below the key psychological level of 85,000 DXY. But here's the thing. This isn't the first time Bitcoin has shocked the world. It won't be the last. And buried inside the chaos are signals, data points, patterns, and historical clues that tell a much bigger story. Tonight, we follow that story step by step. Buckle up. Let's begin. 1. The moment the market broke. Visuals. Zoom into trading screens, order books emptying, charts dipping sharply. It began quietly. Too quietly. Low volume, uncertainty, and a long stretch of sideways price action. Bitcoin had been hovering, teasing breakout traders, frustrating both bulls and bears. Then, in a matter of seconds, a massive sell order hit the books. Not retail, not random panic. This was institutional, the kind of order that doesn't ask permission, the kind that moves the entire market. Suddenly, price buckled. $91,000 broken, $88,000 breached. Then, the line everyone was watching, $85,000, gone. Exchanges lit up with liquidations. Over-leveraged traders wiped out instantly. Billions erased. But here's what's fascinating. This was predictable, not the exact moment, but the conditions leading to it. And that is where our story turns. 2. The dangerous setup. For months, Bitcoin had been climbing on the back of institutional FOMO, retail hype, and media momentum. ETFs breaking records, analysts calling for 150K, 200K, even 500Ks. Everyone bullish, everyone confident, everyone ignoring one major truth. Markets don't like one-sided sentiment. When too many traders believe the same thing, the market loves to prove them wrong. Behind the scenes, funding rates were sky high. Leverage was piled up to dangerous levels. Retail was buying Bitcoin at all-time highs. Whales were quietly, very quietly, moving tokens off exchanges, a perfect pressure cooker. And as history has taught us from 2013 to 2017 to 2021, Bitcoin rises on enthusiasm, but collapses when the crowd becomes complacent. 3. The catalyst. So what actually triggered the drop? Well, analysts disagree, but there are 3 leading theories. Theory 1, a major institution quietly sold. When large entities offload during low liquidity, price doesn't dip. It falls like a trapdoor. Theory 2, a regulatory headline spooked the market. Rumors of new restrictions, tax rules, or ETF delays have caused panic before. Theory 3, simple market mechanics. Too many leverage long positions reaching liquidation levels, triggering a chain reaction of cascading sell orders. In reality, it may be all 3. Crypto rarely moves for one reason. It moves when multiple weaknesses snap at once. And image this. Somewhere in the world, a trader went to bed with $20,000 on leverage and woke up with 0. Bitcoin can be cruel, but it can also be generous because collapses create opportunities. 4. What history tells us. This is where we shift from panic to perspective. Let's step back, because if you look at Bitcoin's history, after the 2013 crash, Bitcoin dropped 80%, then exploded to new highs. After the 2017 crash, a brutal bear market, but the next cycle brought new institutions and the highest prices ever seen. After the 2021 drop, people called Bitcoin dead again, and now it has smashed records most believed impossible. Every cycle has followed the same emotional journey. Euphoria, confidence, panic, despair, accumulation, growth, euphoria again. Bitcoin is not just a price chart. It's a mirror reflecting human psychology. So where are we right now? Some analysts say we're in the shakeout phase, the part of the movie where the audience thinks the hero is going to lose right before the comeback begins. 5. The Bulls argument. Let's hear the bullish case. Supporters argue that the fundamentals behind Bitcoin are stronger than they've ever been. Institutional adoption is accelerating. ETFs continue to attract long-term capital. Mining difficulty is near all-time highs. Supply on exchanges is trending downward. Halving effects have not fully played out. In other words, long-term demand is increasing while supply is shrinking. And Economics 101 says that usually means higher prices ahead. Bulls believe this drop isn't a trend reversal, but a moment of purification, a cleansing, removing weak hands, liquidating gamblers, resetting leverage. So the next leg up has room to run. 6. The bears' argument. But the bears aren't silent, and they have strong arguments of their own. They warn Bitcoin may have peaked for this cycle. Their concerns? The economy is slowing. Liquidity is tightening. Governments may increase pressure on crypto. Institutional positioning might start unwinding. And perhaps the most powerful warning, Bitcoin has never existed in a recession. Markets may be entering a period Bitcoin has never been tested in. If the global economy struggles, risk assets like Bitcoin could face months of heavy pressure. And that brings us to a critical moment in this story. 7. The decision point. We are now at a crossroads, not just technically, but emotionally, because investing, especially in Bitcoin, isn't just about charts and metrics. It's about the ability to make rational decisions while surrounded by fear right now. News headlines are frightening. Social media is catastrophic. Panic is spreading. But the most successful investors in history share one trait. They make decisions based on data, not emotion. So what does the data say? Right now, Bitcoin is hovering near multiple long-term support zones that historically have launched new rallies. But if those levels break, we could be entering a deeper correction. This is where great fortunes are made or lost, not by luck, but by discipline. 8. What smart investors are doing. Behind the scenes, experienced investors aren't panicking. They're analyzing. They're planning. Some are buying the dip, gradually, patiently through dollar-cost averaging. Others are staying out until confirmation signals appear. A few are hedging with stablecoins or short positions. They're asking not what is Bitcoin today, but what will Bitcoin be in 5 years? Because in the long arc of Bitcoin's history, every major crash has been followed by a new high, but only for those with the patience to stay in the game. So, what's next for Bitcoin? Here are the 3 most realistic scenarios. Scenario 1, the bounce. Support holds, confidence returns, and Bitcoin begins another leg upward, potentially breaking new highs. Scenario 2, sideways consolidation. Price stabilizes, traders cool off, and the market prepares for the next major move. Scenario 3, the deeper correction. Bitcoin drops further, triggering more fear before the next long-term rally begins later. No one can predict the exact path. Not analysts, not institutions, not YouTubers, not even the charts. But Bitcoin's history has taught us one lesson. Its biggest opportunities always appear in moments that look like disaster. Bitcoin below $85,000 feels shocking, maybe even terrifying, and that's understandable. But these are the moments investors look back on years later and say, that's where I learned, that's where I grew, that's where the next trend began. Markets rise, markets fall, but Bitcoin, it survives over and over again. If you're here now, still watching, it means you're not just interested in price, you're interested in understanding the bigger picture. And that's how future winners think. If you found value in tonight's breakdown, make sure you hit like, subscribe, and share your thoughts in the comments. Where do you think Bitcoin goes next? This is not the end of the story. It's just the next chapter.